Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing regarding Nifty, Bank Nifty, the key levels to watch out for in trade today, as well as the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So, in yesterday's trading session, the US markets closed on a mixed note. This post the sharp sell-off which was seen in Tuesday's trading session. So we had the Dow which gained by a modest 0.1%, while the S&P 500 lost 0.2% and the Nasdaq dropped 0.3% yesterday. The muted performance hints at lingering uncertainty about the market's short-term outlook. For the S&P 500 specifically, the 50-day EMA zone, that is the levels of 5,490, 5,470 will act as the immediate support. If the index sustains above the levels of 5,470, it could trigger further selling pressure, potentially driving the index down towards 5,400 in the short term. Coming to Brent oil, so Brent oil extended its declines, recording its lowest closing since June 2023. A sustained move below the levels of 72 could open the doors for further downside, with the prices potentially falling to $69 for the short term. The dollar index also resumed its southward journey and ended at 101.26 with a loss of 0.5%. Going ahead, it is likely to test the levels of 100.50 in the short term. Now coming to the update regarding our markets. Due to global cues, the benchmark index Nifty opened with a downside gap yesterday. Despite the initial decline, it found support in the 10-day EMA zone, that is the levels of 25,070, prompting a recovery of more than 100 points in the market. The index ultimately closed at 25,200, registering a modest cut of 0.2%, 3% that is. Going ahead, the zone of 25,320, 25,350 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,350 will lead to a sharp upside rally towards 25,460 followed by 25,550 levels in the short term. While on the downside, the zone of 25,160, 25,140 will act as the immediate support for the index. If the index slips below the levels of 25,140, then the next support is placed in the zone of 25,040 levels. On the derivative front, if we see, the September futures ended lower by 0.42% and the cumulative open interest has surged by 1.21%. Coming to the option chain data, that is for today's expiry, 25,300 strike has significant call open interest followed by 25,500 strike, and on the put side 25,100 has substantial open interest followed by 25,000 strike. Coming to the update regarding Bank Nifty, so Bank Nifty on the weekly expiry day opened with a downside gap and spent the session in an extremely narrow range of 243 points, forming a doji-like candlestick that perfectly captured the market's indecisiveness. Despite tug of war between the bulls and the bears, the index, if you see, held its ground as it managed to stay above the crucial 10-day EMA. Going ahead, the 10-day EMA zone, that is the levels of 51,200 will act as the immediate support for the index. If the index slips below the levels of 51,200, the next support for the index is placed closer towards 50,800 levels. Now coming to the resistance on the upside for Bank Nifty. So on the upside, we see 51,700 which could act as the immediate resistance. Any sustainable move above the levels of 51,700 would lead to an upside rally towards the mark of 52,100. If we see the option chain data, 51,500 has significant call open interest followed by the 52,000 strike, and on the put side, if we see 51,000 has substantial open interest followed by 50,500 strike. Coming to the key market indicators, so we had the advanced decline ratio which tilted in favor of the declining counters in trade yesterday. If we come to see India VIX, volatility index India VIX surged above its 20-day EMA level for the first time after 13 trading sessions. Going ahead, any sustainable move above the levels of 15 would lead to a sharp surge towards the levels of 16.3 in the short term. Coming to the key sectors in focus, so in trade yesterday, defense sectors attracted significant buying interest from market participants, leading to the outperformance in these sectors. So we had Nifty Pharma, Nifty Healthcare indices, which found support at their 8-day EMA levels, resulting in a strong rebound and positioning them as the top gainers among the sectorial indices. Similarly, the Nifty FMCG index found support at its 13-day EMA level and experienced a sharp recovery. These sectors are poised to continue their upward momentum in the next few trading sessions. On the flip side, if we see Nifty CPSE has given a symmetrical triangle pattern breakdown on the daily scale, which is a bearish sign. Hence, we recommend to avoid CPSE stocks for the short term. Coming to the FII DI data, both FIIs and DIs were net buyers yesterday to the tune of 975 and 97 crores respectively. That's a wrap of today's edition of the podcast. Thank you for regularly tuning in. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.